Right now, as you're watching this video, there's a 78% chance that if you lost your job tomorrow, you'd be facing financial catastrophe within 30 days. Not struggling, not uncomfortable, catastrophic collapse. Your rent goes unpaid, your car gets repossessed, your credit cards start defaulting. And here's the terrifying part. This isn't about the unemployed or the chronically poor. This is about working Americans, people with jobs, people who thought they were doing everything right. Before we dive into this financial nightmare that's engulfed 3/4 of the nation, hit that like button and subscribe to this channel. Share this video with everyone you know, because the system doesn't want you understanding what I'm about to reveal. The numbers I'm going to show you will fundamentally change how you see the American economy. This isn't a story about laziness or poor choices. This is a story about a machine designed to keep you exactly one disaster away from ruin. And once you see how it works, you can't unsee it. Let's start with a number that should terrify you. 63% of Americans cannot cover a $500 emergency expense without going into debt. $500. That's not a medical emergency. That's not a car replacement. That's a minor car repair, a broken appliance, an emergency dental visit. The Federal Reserve conducts an annual survey asking Americans how they would pay for a $400 emergency expense. The results are devastating. Only 37% would cover it with cash or its equivalent. The rest would either borrow money, sell something, or simply couldn't cover it at all. But here's what makes this truly sinister. $400 in 1970, adjusted for inflation, would be about $3,100 today. Americans half a century ago could handle an emergency 7 times larger than what modern Americans can afford. We're not just treading water, we're drowning in slow motion. The traditional financial advice used to be simple: save 3 to 6 months of expenses in an emergency fund. Today, that advice sounds like a cruel joke. For a family spending $5,000 per month on basic necessities, that's $15,000 to $30,000 sitting in savings. According to the Federal Reserve, the median American household has $5,300 in savings. That's barely 1 month. The working class isn't failing to save because they're buying too many lattes. They're failing to save because there's nothing left to save. When we say 78% of Americans live paycheck to paycheck, we need to understand what that actually means. This isn't just minimum wage workers. This includes people earning 6 figures. A 2023 survey found that 49% of those earning $100,000 or more reported living paycheck to paycheck. These are professionals, managers, people who climbed the ladder and still can't breathe. The engineer, the marketing director, the senior accountant, all one missed paycheck from panic. The mechanism is brutally simple. Fixed costs have exploded while wages have stagnated. Housing costs have increased 118% since 2000, while median wages have increased just 19% in the same period when adjusted for inflation. Healthcare costs have tripled. Education costs have quadrupled. Childcare in many cities costs more than rent. You're not imagining it. The math literally doesn't work anymore. Consider this. In 1970, a single income could support a family of 4 with a house, a car, healthcare, and save for retirement. Today, 2 incomes can barely accomplish the same feat, and often can't. The productivity didn't disappear. American workers are 400% more productive than workers in 1950. The wealth is being created. It's just not going to the people creating it. The paycheck-to-paycheck existence isn't a personal failure. It's a systemic feature. Here's how the machine works. When you can't build savings because every dollar is allocated before it arrives, you become dependent on debt for any deviation from the plan. And the system is ready with open arms. Total household debt in America has surpassed $17 trillion. Credit card debt alone has crossed $1 trillion with average interest rates hovering around 22%. Let that sink in. When you can't cover a $500 emergency with cash, you put it on credit at 22% interest, turning a $500 problem into a $610 problem within a year. But credit cards are just the beginning. Medical debt affects 41% of American adults, not people without insurance. Insured Americans who still can't afford their medical bills. A single hospital stay can generate bills that take years to pay off, even with insurance covering 80%. Student loans have evolved from educational investments into generational anchors. The average borrower owes $37,000 with payments that can easily consume 10 to 15% of their income for decades. You can't save for emergencies when you're hemorrhaging money to interest payments. Auto loans have stretched to an average of 68 months, nearly 6 years to pay for a depreciating asset. Americans now owe $1.6 trillion in auto loans, with average monthly payments exceeding $700. That's money that could be building an emergency fund instead of enriching lenders. The trap is elegant in its cruelty. You need debt to survive unexpected expenses, but debt payments prevent you from saving for future unexpected expenses, guaranteeing you'll need more debt when the next emergency arrives. There's a phenomenon economists call the poverty penalty, the fact that being broke is expensive. When you're living paycheck to paycheck, you pay more for everything. You can't buy in bulk to save money because you don't have the upfront cash. You can't take advantage of annual subscriptions that would save you 20% because you need to pay monthly. You can't invest in quality items that last longer because you can only afford the cheap version that breaks quickly. Banking becomes a trap. When you're living on the edge, overdraft fees are a constant threat. The average overdraft fee is $35, and many Americans pay multiple overdraft fees per year. Banks collected $12.4 billion in overdraft fees in recent years, essentially charging poor people for being poor. You can't maintain good credit because you're constantly juggling payments, so when you need to borrow, you pay higher interest rates than wealthier borrowers. The risky borrower pays more, ensuring they stay risky. Transportation costs explode. You can't afford the reliable car, so you buy the $3,000 used car that breaks down constantly, costing you more in repairs than a car payment would have cost. But you can't get approved for the car loan because your credit is damaged from being poor. Housing follows the same pattern. You can't afford a down payment, so you rent, building no equity while your landlord's mortgage gets paid off with your money. Renters spend an average of 30% of their income on housing with nothing to show for it at the end. Being poor is a full-time job that pays you nothing and costs you everything. The American worker is producing more value than ever, but seeing less of it than any time since the Great Depression. This isn't an accident. It's policy. Adjusted for inflation, the federal minimum wage is 30% lower today than it was in 1968. If minimum wage had kept pace with productivity gains since 1968, it would be $26 per hour today. Instead, it's $7.25. But this isn't just about minimum wage. Median wages have been functionally frozen for decades. When adjusted for inflation, the median worker earns roughly the same as a worker in 1979, 44 years of running in place. Meanwhile, productivity has increased 77% in the same period. Workers are creating substantially more value per hour, but wages haven't budged. Where did that money go? Corporate profits have exploded. CEO compensation has increased 1,460% since 1978, while typical worker compensation has increased just 18%. The average CEO now makes 399 times what the average worker makes, up from 20 times in 1965. This isn't about market forces. This is about power dynamics. Union membership has collapsed from 35% of workers in the 1950s to just 10% today, stripping workers of collective bargaining power. Right-to-work laws, corporate consolidation, and systematic union busting have tilted the playing field so dramatically that workers have no leverage to demand their share of the value they create. You're not failing to get ahead. The game is rigged to keep you from winning. Medical expenses are the leading cause of bankruptcy in America, responsible for 66% of all bankruptcies. And here's the part that should enrage you. 75% of those people had health insurance when they got sick. The average American family now pays over $22,000 per year for healthcare coverage, split between employer contributions and employee premiums, deductibles, and out-of-pocket costs. For many families, healthcare is now their second largest expense after housing. But having insurance doesn't mean you're protected. High deductible plans have become the norm. The average deductible for an individual plan is $1,644, meaning you're paying thousands in premiums for the privilege of paying thousands more before insurance covers anything. A broken arm can cost $2,500 after insurance. A standard childbirth can generate $4,500 in bills for the mother, even with good coverage. Cancer treatment can bankrupt families despite insurance, as out-of-pocket maximums can reach $9,100 for individuals and $18,200 for families annually. Prescription drug costs have exploded. Insulin that costs $10 to manufacture sells for $300. Life-saving medications can cost thousands per month. Americans spend more on healthcare than any other developed nation, twice the average of comparable countries, while achieving worse outcomes. The cruelest joke? Employer-sponsored healthcare ties your medical coverage to your employment, meaning that losing your job doesn't just threaten your income, it threatens your ability to survive illness. The system is designed to make you too terrified to quit, too desperate to negotiate, too broken to fight back. Housing has transformed from a basic human need into a financial weapon. The numbers are staggering and getting worse. The median home price in America is now $417,000. The median household income is $74,000. That means the median home costs 5.6 times the median income. Historically, that ratio was 2.6. The American dream didn't die, it was priced out of existence. Rent hasn't provided escape from this nightmare. The average American renter spends 41% of their income on housing, far above the 30% that financial experts consider sustainable. In major cities, it's not uncommon for rent to consume 50–60% of take-home pay. Housing costs have risen 118% since 2000, while wages have increased just 19% when adjusted for inflation. The math is simple and brutal. People cannot afford to live. But here's where it gets darker. Corporate investors and private equity firms have been buying up housing stock at unprecedented rates, converting homes into investment vehicles. In some markets, investors account for 30% of home purchases, competing with regular families and driving prices even higher while converting homeownership into permanent renting. Landlords, facing higher property costs themselves, pass those increases to renters with annual rent hikes. Renters can't save for down payments because rent consumes everything, ensuring they remain renters forever, enriching landlords with every payment while building zero equity. The system has created a permanent renter class by design. You're not failing to buy a home, you're being systematically prevented from joining the wealth-building class. Student loan debt has surpassed $1.7 trillion, affecting 43 million Americans with an average burden of $37,000 per borrower. But these numbers disguise the true weight of this anchor. College costs have increased 169% since 1980, while wages for young workers have increased just 19% in the same period. A bachelor's degree that once cost $10,000 now costs $100,000 or more at private institutions. The promise was simple: invest in education, earn higher wages, pay off the debt. The reality has been devastating. Graduate degrees multiply the burden. Medical school graduates average $200,000 in debt. Law school graduates owe $145,000 on average. These professionals start their careers already buried, spending their peak earning years paying interest instead of building wealth. The monthly payments are crushing. A borrower with $37,000 in loans at 5% interest will pay $400 per month for 10 years, totaling nearly $48,000 to repay a $37,000 loan. That's $400 per month that can't go toward an emergency fund, retirement savings, or a house down payment. The cruelest aspect? Student loans are nearly impossible to discharge in bankruptcy. You can bankrupt out of a mansion, a yacht, or a failed business, but education debt follows you to the grave. The system has created debtors who cannot escape, guaranteed revenue streams for lenders, and an entire generation locked out of wealth building. This wasn't necessary. Many developed nations offer free or low-cost higher education. America chose debt servitude instead, calling it opportunity. The traditional three-legged stool of retirement, Social Security, pensions, and personal savings, has been kicked out from under American workers. What remains is a one-legged wobble toward financial disaster. Pensions have been systematically eliminated. In 1980, 38% of private sector workers had defined benefit pensions. Today, it's 12%. Companies shifted the risk and responsibility to workers through 401k plans, transforming retirement from a guaranteed benefit into a gamble on market performance and personal discipline. But personal savings require something to save. When you're living paycheck to paycheck, retirement savings become a luxury. According to the Federal Reserve, 25% of Americans have no retirement savings at all. Of those nearing retirement age, the median 401k balance is just $164,000, generating about $656 per month in retirement income if following the 4% withdrawal rule. Social Security was never designed to be the sole retirement income, yet for 40% of seniors, it provides at least 90% of their income. The average Social Security benefit is $1,127 per month. Try living on that while covering healthcare, housing, and basic needs. The retirement crisis is arriving. Baby boomers are retiring into poverty at increasing rates. 10,000 Americans turn 65 every day, and half of them have less than $25,000 saved. They'll work until they physically cannot, then subsist on Social Security while their adult children, crushed by their own financial burdens, cannot help. Generation X and millennials face an even darker future. They've endured multiple economic crashes, stagnant wages, higher costs, and systematic wealth extraction. The idea that they'll retire comfortably isn't just optimistic, it's delusional. This didn't happen by accident. The paycheck-to-paycheck existence of 78% of Americans is the result of deliberate policy choices over decades. Corporate consolidation has eliminated competition, allowing companies to suppress wages while raising prices. The minimum wage has been frozen despite inflation. Tax policy has shifted the burden from corporations and the wealthy to working Americans. Union protections have been systematically dismantled. The financialization of everything has transformed housing, healthcare, and education from basic needs into profit centers. Private equity firms buy up necessity goods, extract maximum value, and leave workers paying more for less. Regulatory capture means the agencies supposed to protect workers instead protect corporations. The revolving door between industry and government ensures that policies favor employers over employees, lenders over borrowers, landlords over renters. This is class warfare by policy. The wealthy have won by changing the rules, convincing workers that their poverty is personal failure rather than systematic theft. 78% of Americans living paycheck to paycheck isn't sustainable. You cannot run an economy where 3/4 of participants are one emergency away from collapse. History shows us what happens when the majority has nothing left to lose. The question isn't whether this system will break. It's already breaking. The question is what comes next. Some will tell you to budget better, work harder, make better choices. They're gaslighting you. The system is designed to extract everything you produce and leave you with scraps. Understanding this isn't defeatism. It's clarity. You can't fix individual problems with individual solutions when the problem is structural, but you can stop blaming yourself. You can start demanding change. You can recognize that you're not alone in this struggle and that solidarity is the only weapon the powerless have against the powerful. The machine wants you isolated, ashamed, and desperate. It wants you too busy surviving to organize, too exhausted to resist, too scared to fight back. But now you know. You can't unknow it. And once enough people understand that their personal crisis is everyone's crisis, that changes everything. The question is, what are you going to do with this knowledge?